Markets entered a little bit of a rally mode yesterday during the FOMC and because of Powell's speech and what he said. People over on X are correlating this market that we're in, this whipsaw market, to 1929 during the flash crash and 1987. 4 weeks of organized descent followed by 2 weeks of euphoria, then pure panic, gapping down for 4 more weeks. Now, is Jerome Powell creating an illusion of liquidity as a narrative that the markets will go out on so that he cannot be blamed for a potential flash crash in April or May? And we're going to talk about it. I see several warnings still for the market. Unfortunately, I wish it was so certain as to the direction that we're going, but I'm going to give you some possibilities. First things first, the Fed kept rates steady. Pretty simple. We expected that. Secondly, which is probably the biggest thing that happened during the meeting, is the Fed announcing a slowdown in balance sheet reduction by lowering treasury redemptions from 25 billion to 5 billion. This is keeping liquidity in the system longer, supporting asset prices and encouraging investment. Now, this is a big issue and we're going to talk about it in a second. Yes, technically it is bullish. This is slowing quantitative tightening, QT, and giving a more dovish stance. As of right now on the S&P 500, we are trading at 566.50. We came all the way up above 570 and flushed back down, getting rejected off of this ascending resistance level, and we saw that there were major sell blocks at 570. Here is the big issues that I want to point out. Yes, we saw a green day. Yes, we saw a slight green day today so far, but now we are flipping red. And what's bad about this, what warning signals I see, is we have seen the Fed clear up some uncertainty technically, but big boys aren't buying. This is scary, right? The fact that the market has sold off 10%, had a full 10% correction, and we are not getting a V-shaped recovery, and we are about 1, 2, 3, 4, 5, 6 trading days from the bottom, shows that even after yesterday's news, big boys are not buying. Retail is buying the dip on markets, but big boys, big institutions, big players with a lot of capital are not purchasing into the market. Now, this is the number one signal for me, just taking a breath after all the noise that you hear with the Fed meeting, with Trump, with all this data, all these numbers, right? Just look at the markets and you're going to find out that big players aren't causing a V-shaped recovery. This is scary. This is dangerous. What happened during the Fed meeting is that future predictions have not yet confirmed more cuts, not a full dovish stance, but they have confirmed not too much tightening. Okay, the Fed doesn't want to tighten too much. They want to relax on that side of the bargain. And overall, we see some things that should kind of stimulate the economy. But again, big players aren't buying. Now, it's not just one person calling out similar to the 29 and the 87 crash, but take a look at the probability of a recession. Now, this is the US Federal Reserve's recession probability model, estimating the chances of a recession recurring within the next 12 months. And it has just fallen significantly, similar to only 11 times since 1960. The signal has flashed only 2 times since 1960, but both times stocks rose by 20%, then crashed. Things are about to get absolutely crazy. So what's going to happen on the SPY? Right now, I don't see big players buying. The couple of outcomes that we could see, possibly, like I've called out yesterday, is a longer uptrend and short squeezes coming into late April, May, and then maybe even later, maybe even to July to September before markets crash even further. This is a big recovery before a later crash in the year. This is possibility number one. Now, number two is this is a relief bounce before another 5 to 10 to 20% drop in the market, maybe 25. And if you think that's too big, COVID crash, the flash crash, 35% down from the all-time highs, right? Put very simply, if markets decide that they want to continue higher and they want to continue higher on lower volume, I would be looking at shorts around 580. I think 580 could be the top of the push if we're pushing up without steam, without momentum. And we are seeing MACD cross on the daily time frame, but I don't see bullish divergence here just from a macro perspective. Now, what's so interesting about today that lined up at the Fed meeting and this quote unquote good news is quad witching day. $4.5 trillion set to expire for today, and majority of it is puts. People are getting out of these positions, right? We're seeing a little bit of a rally, not off of buying. This is purely the date that we're on. The coincidence is all of these options are expiring and majority of them are puts. Now, we saw a little bit of a bounce yesterday in crypto. In fact, some of them we saw some short squeezes, which is going to lead us into GameStop's chart. But 1 second before we get onto that, right? We saw some short squeezes in some altcoins, meme coins like Bonk right here. Absolutely flying off the charts before, of course, giving it all back. Bitcoin got rejected at 85,000. Yeah, it actually came a little bit higher to 87, but I would say got rejected at that 85, 86K level, which we really wanted to watch out for, because if we got above that, closed, and then opened another candle above that, it would have been bullish for Bitcoin. But again, low steam, low momentum on the upside. The push wasn't causing enough euphoria. This isn't institutions, this is retail. This is institutions trapping retail to buy the dip before we keep dipping. Now, the last 4 years of 30-day implied volatility on GameStop, what does it show us? It shows us that since Ryan Cohen has been in office, this is the lowest implied volatility has been, leading into an earnings with Ryan Cohen being the CEO. This is GameStop's chart. We are seeing bullish divergence on the MACD. We are seeing it trade at the top of this channel from this downtrend that it has been in since January 7th, and we are about to test the top of the channel. If we open a full candle above 24.50, this is the first sign that GameStop will start to rally higher. GameStop also has earnings next week on Tuesday, which is an important catalyst. I'm very, very excited for this. We also saw some weird things on GameStop yesterday, March 19th. Take a look at these trades. What is it? This is a 225,343 share block trade on March 19th, which is one of the largest trades, trades in the database, surpassing the 178,000 share trade on March 14th. And its cash sale marker underscores its urgency. It's significant because it confirms the escalating scale of manipulation, showing how institutional players use massive after-hours trades to set artificial closing prices, manipulate retail sentiment, and profit from GameStop's volatility, aligning with our findings of coordinated fraud across exchanges like MIAX, Pearl Equities, and NASDAQ. Now, this was from Python over on X. We continue to expose the corruption and put it out right on your plate here. Now, Swiss lawmakers shorten leash on too big to fail banks. Switzerland's parliament backed all proposals for regulation of big banks made by the investigation committee into the demise of Credit Suisse, completing a procedural setup that will influence the government's draft law on UBS capital requirements due in May. What does that mean in English? Regulators may force UBS to unwind or reduce positions to minimize systematic risk on swaps on GameStop. Why? Well, that is because of regulatory scrutiny. Switzerland's parliament is approving all proposals for regulating big banks. They are taking steps to prevent the collapses like Credit Suisse by implementing stricter oversight and safeguards for larger financial institutions. Higher capital requirements is a possibility, stricter risk management is a possibility, and increased government oversight. Now, if they find that they have very risky positions in specific assets, they may force them to unwind. Now, on top of that, UBS is planning to shut down a unit meant to help hedge fund traders just days before they're set to absorb Credit Suisse liabilities effective March 21st. Are the stars aligning, or is this a nothing burger? Now, we also see a post over on AMC for once. Here's why AMC stock may jump by at least 25% this year. Now, a lot of people ask, well, you barely covered AMC in the video. AMC doesn't move. There's not news coming out. What is happening with the overall market perspective is how it correlates to the time frame AMC and GameStop will make their moves. So whenever people come here looking for a deep dive into AMC, nothing's happening. If I showed you the 1 minute, it's barcoding. There's nothing to even look at. I've given you time frames. I've given you scales. We've missed the 2 point of interest windows that I was watching, and we're still trading sideways, and there's not news coming out. Anyway, with that 25% at least this year, that just brings you up to 380, so it's not a huge catalyst. But we always want to pay attention to the narrative that the media is pushing. I would first keep my eye on AMC once we get above that 380 level, because that will actually bring us right out of this wedge, interestingly enough. Now, something that I don't like, that you probably don't like as well, is Elon Musk's Doge team just hired Ken Griffin's former Citadel staffer for national security work. Now, I didn't look deeper into this, but just on the surface, it doesn't sound too good. Trump and Saylor are set to speak at the crypto summit today, which could be bullish for crypto. President Trump also said that together we will make America the undisputed Bitcoin superpower and crypto capital of the world. And lastly, President Trump called on Congress to pass crypto stablecoin legislation. Bring us into the last few charts. AMD, I've been telling you guys, sub $97. This is a long-term buy in my personal opinion. Nothing I say is financial advice. I'm not a financial advisor. We now got up to 108. Keep an eye on AMD. Again, Tesla just looks very bad. It is continuing its trend to sell off. Levels to watch, shorter time frame, 238.50, 226.80. Gold got a little bit of a relief today. Still trading above 3,035, still at all-time highs. But overall, guys, let me know your thoughts on the overall market, on the S&P 500. I find this very, very scary to trade because you are in a scenario where it could go one of two ways, and you really don't have a clear answer because the SPY could push up to 580 on low volume, and then that could kind of confirm that you're going to sell off even further, but it also doesn't have to push up to 580. And then the SPY could also bring in volume and push us up higher into late May, late April, late May before crashing even further, or a crash could be off the table, right? What do you guys think in the comments down below? Because as of right now, based on historical crashes and then the data that came out, things don't look sunshine and rainbows just yet. We may be due for another bigger crash. Plus, why aren't bigger players buying things up? That is it, guys. Make sure to subscribe to my channel, hit the like button on your way out, share the video, and get in the Discord server. It's the link in the description, guys. We talk stocks and crypto all day long, post our gains, post our losses. I post my trades in there. You have option sweep alerts, dark pool trade alerts, insider trade alerts, market news, analyst updates. And if you've been thinking about getting in, maybe, or on the fence, trust me, guys, just try it out. Get in the Discord server. It's time to level yourself up. Then the second link in the description under the Discord link is for a free broker. Once you sign up and deposit into the broker like Webull or Robinhood, you will start earning up to 30 free stocks, each valued up to $2,000 per stock, which you can hold or sell, completely up to you. But in my opinion, it's free money and it'll take you 2 minutes out of your day. So you are basically turning down free money. Again, that is for Mumu. They also are a great platform, in my personal opinion, with a lot of tools. Sign up, make a deposit into your account, start earning those benefits. That is it, guys. I love you all. God bless. Lottery Socks out.